program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Thanks for joining us again here at AusBiz as we get across what is moving markets globally. Let's start on Friday in Wall Street, and in fact losses on markets more muted with MSCI's global index. It was up 0.4% for the week. Now Wall Street's major indices were mixed as investors contemplated no more interest rate cuts from the Fed this year, while also looking ahead to Nvidia's quarterly results this Wednesday. For the week, the S&P was up marginally, the Dow adding 0.3%, the NASDAQ lost 0.5%. Stocks, specifically Nvidia, Palantir and Microsoft, gained, yet for the month so far Nvidia's lost 6%, Palantir 12%, while Oracle is down 14%. The top three S&P 500 movers were Micron Technology, DoorDash and Super Microcomputer. United Health Group and Visa both weighed on the Dow. Warner Brothers Discovery gained after the entertainment company said it had amended Chief Executive David Zaslav's employment agreement amid a strategic review of its business. Cidara Therapeutics shares more than doubled after Merck said it will acquire the company in a close to $9.2 billion deal. And US listed shares of BHP and Rio fell, tracking the copper price lower after weak economic data from China found concerns over demand. Well, while the US shutdown has ended, the data vacuum continues. The Bureau of Labour Statistics in the States saying it will release employment data for September this week, while there's doubt about the publication of October's inflation data. Amidst that vacuum, more Fed members have argued why rates should not be cut at the December meeting, with Laurie Logan saying, "I think it would be hard to support another rate cut unless we were to get convincing evidence that inflation is really coming down faster than my expectations, or that we are seeing more than the gradual cooling that we've been seeing in the labour market." While Jeffrey Schmidt has said, "I do not think further cuts in interest rates will do much to patch over any cracks in the labour market. However, cuts could have longer lasting effects on inflation as our commitment to our 2% objective increasingly comes into question." Well, US Treasury yields rose on Friday. The 10-year is at 4.15, the 2-year around 3.61%. Meanwhile, in the UK, government bonds and stocks suffered steep losses on speculation around the government's highly anticipated budget at the end of the month, with Finance Minister Rachel Reeves saying she has no plans to raise income tax rates. The US dollar index was little changed. The Aussie is trading at 65.3 US cents. On the commodities front, oil prices surged on Friday as one of Russia's main ports halted oil exports following a Ukrainian drone attack, stoking supply concerns. Brent crude futures up around 2% at $64 a barrel. Copper fell 0.8%. Iron ore remaining at around 103 US a tonne. And gold tumbled on a broader market sell-off sparked by hawkish remarks from Fed officials. Spot gold down more than 2% at around $4,080 an ounce. And Bitcoin also tumbling below 94,000, its lowest level in 6 months. Let's get more on the global outlook then, with a focus also on New Zealand. Greg Smith joining us from Generate Investment Management. Greg, welcome back. Happy Monday to you. Let's start with what we've seen on Wall Street. Well, in fact, no, let's start first with how you've opened. Obviously, you're leading off globally. What's the trend you're seeing?
Yeah, Andrew, great to be here. So we are up 0.1% as the NZX 50. So I suppose, following that lead, of course, a bit of renewed optimism around the AI narrative with Buffett's holding disclosure and Alphabet. Obviously, he's been buying a lot of that. But we've picked up a little bit today. We had a positive print on the manufacturing sector on Friday, but we've had a negative one on the service sector today, so just increasing the case for rate cuts. We are starting to see some of our cyclical stocks turn around and really perk up. So we had Mainfreight, big logistics company here, that was up 15% last week. That's edged a little bit higher again today. So yeah, we're starting to see some turnaround in those cyclicals.
Yeah, what do you see more broadly in the Kiwi economy at the moment? Obviously, given the RBNZ has cut, further expectations of cuts then to support the economy going forward?
Yeah, for sure. So I think it's a bit of a cliche, isn't it? Green shoots, but they're trying. But yeah, the economy's still done up pretty tough. But it very mixed. As I said, so our manufacturing sector, for instance, has been in expansionary territory for a number of months. But our services sector, just data out today shows that it's still in contraction. It's been in contraction for 20 consecutive months. So it's a bit of an anomaly when you look at a lot of other countries' services sectors. So yeah, those rate cuts, Andrew, are taking a while to sort of feed through. We've obviously had a number of them. We've had rates taken from sort of 5.5% last year down to sort of 2.5%. But yeah, it's still around about 40 or so percent of mortgage holders due to come off onto lower rates, and businesses as well, lower borrowing costs. So yeah, we should see that come through. But certainly the case still for the RBNZ to go ahead with another rate cut, probably at least 25 at the end of this month.
Central banks around the world, certainly in developed economies, are juggling. It's that balance between inflation and jobs at the moment. How's that playing out for the Kiwi economy?
It's similar because our inflation's actually the top of the RBNZ's range. They actually only have one primary mandate, which is price stability. So they actually got rid of the other side of that a few years ago. Now, but there is a noted inclination, as we're seeing for a lot of central banks, to look at what the labour market is doing, and look, it's pretty tough here still. So particularly in Auckland, a bigger city, unemployment's running at about 6%, which is quite high. It's historically national unemployment is still reasonable levels, I suppose you'd say, but does look to be edging up. It's certainly higher in pockets. Youth unemployment is very high. A lot of industries, as the services data today showed, are struggling a little bit. So I think we're going to see that inclination to, favour the job side and try and sort of get that perked up a bit more. Inflation is at the high band of target. The RBNZ keeps saying that inflation is going to fall next year, and I suppose the main reason for that, they see lots of capacity in the economy, which I think is fair to say. I mean, we haven't been growing for some time.
Now, let's focus on Wall Street, Greg, what we're seeing there, and perhaps questions of whether we're starting to see some cracks in that AI trade. It is going to be a very big week this week with the daddy of them all, NVIDIA, reporting.
Oh, absolutely. Yeah, there's going to be a lot of focus on that. I mean, can they deliver? And I suppose the thing is, though, it's you've seen some of the peers, of course, sort of start to gain in the ascendancy as well. I mean, obviously, it has been a very crowded trade in terms of AI, and 30% of the market when you look at the S&P 500. But yeah, it was fascinating, wasn't it? Michael Burry's been sort of getting a lot of headlines in terms of what he's been saying. He's been shorting NVIDIA and he's shorting Palantir, which I think are two very different stocks in terms of their valuations. We could probably spend a little bit of time on that, but Palantir is certainly pretty excessive on traditional metrics. But of course, Warren Buffett, disclosing that he's been buying up Alphabet, so $5 billion almost in the most recent quarter. And tech's not normally his game, so very much out of his wheelhouse. I mean, Apple's a big holding, but he sees that as a consumer company. So I think that's sort of really fascinating and effectively sort of jumping on the AI trade. And also given that you think back to 2019 when he's told shareholders that they regretted not buying Alphabet. Now, it was $60 back then. It's now $286. So it's gone up 5 times, and he's been buying it like a storm. So I think that's fascinating. I mean, maybe he likes all the cash on the balance sheet, Andrew, around about 100 billion almost, I think, there. But obviously, can't all be winners from the AI narrative, but perhaps Buffett sees Alphabet as one.
Yeah, I don't think it beats NVIDIA, though. I think it's up around 1,000% over the past 3 years. Not bad if you're in it. Greg, also, obviously, investors are concerned about what we're hearing from the Fed at the moment. More hawkish speak, perhaps ruling out the chance of a rate cut next month.
Yeah, that's right. So it's certainly diminished a bit, hasn't it? I suppose you talk about a big week with NVIDIA, but it's also a very big week in terms of data, right? We've obviously got that delayed payrolls are poor. The US shutdown has ended, so we've got an absolute deluge. So I think obviously we saw a bit of nervousness around that on Friday, and I think that's why, because this a data-dependent Fed hasn't really had any official data to deal with. Obviously, some private sector data. So this could really sort of swing it over the next week or so in terms of whether we get the other rate cut this year. You do sort of feel like they're, as I mentioned earlier, prioritising the employment market. So I think that non-farm payrolls report, delayed though it is, will be really, really key. And that could be, bring it to a coin toss, whether we get that rate cut.
Greg, great to get across what you're seeing both locally and globally. Thanks for joining us from Generate.
Pleasure. Have a great day.
You too. Okay, well, speaking of great days, is that how it's panning out for us locally? Well, let's take a look at the ASX futures there. We are off by around 0.1%. So looks potentially as though they're going to be adding to those steep losses that we saw on Friday. Not a lot of corporate news out, but we'll get across that very shortly. Please stay with us as we get across the open.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.